Russia's sovereign debt was downgraded to junk status.
The ruble is worth less than a penny.
On top of all that, there's been fears of a looming real estate crisis, which now threatens to drive the Russian economy further into the ground.
A superheated war economy at risk of going supernova in the worst way possible.
But all of these consequences are the result of Putin's choices and Putin's choices alone.
The backbone of Putin's economy is breaking today, and the fear of losing political power is driving a collapse of logic. Russia's multi-trillion ruble housing market is in a death spiral, but there's no parachute. Banks are refusing loan applications by the millions, and average citizens are now facing absurd 30% interest rates. The most shocking part is the bizarre solution. Putin's regime is now secretly forced to build housing units for phantom buyers who don't exist. They keep building empty cities, risking a massive housing bubble, because Russia literally cannot afford for the construction sector to slow down. This crisis is a deliberate act of self-sabotage. It's the result of a vicious cycle where the state tried to mask debt with huge subsidies, created crippling inflation by printing 4.3 trillion rubles, and now must choose between a financial collapse and a political revolution. This is how a pointless war destroys a nation from the inside out. The story starts after the fall of the Soviet Union. Back then, Russia's housing market was one of its most important economic pillars. It offered a platform of stability against which the entire country's economy could lean on. After all, a country with almost 150 million citizens needed plenty of housing units. And to build those housing units, you need construction. A lot of construction. All of that construction needs plenty of materials. Those materials need production and transport. The transport requires fuel, and so on and so forth. The housing market was the ignition spark that made trillions of ruble-shaped gears turn, pushing the entire Russian economy forward. This corner of the economy, though, is now grinding towards a halt. According to insider data, the second quarter of 2025 was devastating for the market. A drop in sales was recorded every month, with an astonishing 55% drop recorded in June. To find out why this is even happening, we have to take a look at the mortgage system of this country, a system starkly different from most modern loan systems. First of all, it's important to differentiate the first-tier and the second-tier markets. In Russia, the first-tier market refers to newly built homes that were never occupied before, while the second tier refers to the sale of existing and used units. First-tier units dominate the Russian market, and that dominance has only increased since 2020 because of the country's newly developed mortgage system. Aside from the fact that newly built homes outnumber used units, there's also a massive price gap between the two. Tier 1 homes cost almost 1.5 times more than existing units, or about 44% more on average. The reason for this lies in Russia's mortgage system. In order to stimulate the market after the COVID-19 pandemic, which saw both the housing market and construction die down, Russia introduced so-called preferential mortgages, which only apply to first-tier housing units. The idea behind the system was to bolster demand by helping pay off loans, which would result in a positive turnaround in the construction sector. However, so many Russians became dependent on preferential mortgages that they became a huge burden for the country's budget. These mortgages work by the majority of the interest being paid to the banks by the state, not by the borrowing citizens. An ordinary interest rate in Russia came in between 16 and 20% in 2024. But with a preferential mortgage, the buyer would pay about a 6% interest rate, with the state covering the rest. Preferential mortgages are available to young families, IT workers, defense workers, and citizens in certain Arctic, Far Eastern, and rural regions. They, however, come with a set of caveats. For example, although a family with at least one child younger than 6 can get approved for the mortgage, they need to offer a down payment between 20.1 and 30.1% in advance. This essentially means that poor families can't get preferential mortgages, even though the mortgage was specifically designed to help them. IT workers were treated much better by the state, in a desperate attempt to keep the workers in the world's fastest-growing industry in the country. That, however, didn't stop them from leaving. Since Russia cut itself off from the rest of the world in 2022, it's estimated that several 100,000 IT workers are working in exile, and the preferential mortgage isn't enough to bring them back. Despite those issues, millions of Russians were still able to get preferential loans to Tier 1 homes, which did boost the construction sector for a while. However, it seems that Russia just replaced one set of problems with another, as the government-subsidized loans placed a lot of strain on the national treasury. Russia invaded Ukraine back in 2022. I'm just saying this in case you've been living under a rock. And war, if you don't know, is very expensive. The country has been bleeding capital left, right, and center, which makes paying off preferential loans even more difficult. Because of this, the State Duma, the lower house of the Federal Assembly of Russia, has been seriously considering increasing the citizen share of the interest rate from 6 to 12%. Simply put, Russia's budget is very tight, and it's increasingly tightening every day, making it more and more difficult to deal with the preferential loan system they themselves invented and implemented. Additionally, this is the reason banks started massively refusing preferential loans to borrowers. In 2024, 4 out of 5 mortgage applications were refused, and out of all the borrowers who did manage to get a preferential loan, almost half of them got a return plan that would see them having to spend more than 80% of their net income on loan payments. In the end, Russia's newly designed mortgage system, which was just supposed to help alleviate the pressure created by the COVID-19 pandemic, became the leading mortgage option for the public. It also kickstarted the vicious cycle of debt, in which the state tries to help the debt of the citizens, digs itself into a deeper hole, and raises interest rates for the citizens, rinse and repeat. This resulted in a widespread public insolvency, with only the rich elite being capable of buying property without seeing the vast majority of their income cut off. The government-subsidized loan program ended in July of 2024, and that kickstarted a huge plummet in real estate interest. June 2025 reported an incredible 66% drop in mortgage issuance compared to June 2024, which essentially means that fewer people are buying real estate. The reason for this drop lies in the insanely high mortgage rates, which are no longer subsidized by the government. If a borrower takes out a loan of 4.4 million rubles with a 20% down payment at a 30% annual interest rate, which is, believe it or not, a pretty standard deal in Russia at this point in time, they'll pay back 14.6 million rubles over the loan's lifetime, which is just absurd. The terrible loan system, however, isn't the only reason behind the collapse of Russia's housing market. When Russia invaded Ukraine, the worth of the ruble quickly shot up before dropping. This happened because Russia increased military expenditure and other financial inputs to keep the country running while they're at war. And to ensure enough funds, the Russian central bank thought of the same solution we all thought would work back when we were kids: print more money. They printed 4.3 trillion rubles to be exact. And this incredible increase of domestic funds in such a short time period created a huge inflation problem, reaching the highest level since 2002. This affects the housing market in 2 negative ways. And for the record, this applies to all economic systems, not just Russia's. First of all, by its very definition, inflation implies growth in the sheer amount of money on the market. If there's more money in the market, the prices of commodities rise. And this doesn't just include real estate, it includes vehicles, jewelry, and pretty much anything considered a luxury. Additionally, since real estate is by far the most sought-after commodity, it is the sector in which prices rise the most. The second way inflation affects real estate prices is part of human psychology. Inflation implies that it's a time of crisis. And in a time of crisis, people like to own something of real value, a real asset. The most sought-after real asset is property, which means that the prices of property have to skyrocket. So, to put this into simpler terms, this inflation was pretty much artificially created by Putin and his cronies when they decided to invade Ukraine. And they did it while the state treasury was paying off the majority of interest rates on mortgages. Not only were they paying off existing debt, but the program was very much alive in 2022, which meant that they were still signing up new borrowers for the program while literally creating inflation. If that doesn't speak enough about the stupidity of this country's leadership, I don't know what does. So the story, however, is not yet over, because we still need to talk about a huge brick in this tumbling house: international sanctions. Other countries didn't really like it when Russia invaded and started shooting everyone in a sovereign country, and the best way to punish an enemy without directly involving yourself in combat is through economic means. The vast majority of the world imposed every possible sanction they could with Russia, and that definitely had an effect on Russia's housing market. First of all, it negatively affected the country's buying power, and it added to the already growing inflation. More closely to the topic at hand, it destroyed the investment climate in the country. Investors were, all of a sudden, backing out of their development plans. This mainly affected the supply side of the supply-demand scale. Projects had to halt because foreign investors were pulling their funding. On the demand side, projects that were funded by Russian investors, but were supposed to be sold to foreigners who wanted real estate in Russia, had to be halted because their potential buyers were blocked off. On top of that, the lack of Western investors weakened the general real estate demand. Overall, the sanctions imposed by other countries negatively affected both supply and demand in the housing sector. When it comes to capital outflow, the movement of assets out of a country, Russia's losses exceeded $200 billion the year it invaded Ukraine, which is the biggest loss in capital in the country's history. Now, according to reports from July, the housing construction sector fell by barely 2% from January to June of 2025, implying that rising prices and lower real estate interest isn't a lifeline for builders. Commercial real estate developments dropped by a staggering 38%, though. But they're still building way too many units for such a low number of interested buyers. This poses the question, if Russia's public is this insolvent, and if the interest for first-tier housing units is this low, why do new buildings and neighborhoods keep popping up, seemingly overnight? Who are the construction companies building them for? One of the reasons behind this are developer installment programs. These programs used to be very popular in Russia, and they function by paying installments directly to the company that built the property without taking a loan. The developer and the buyer mutually establishes the value of monthly installments, and the buyer pays it to the developer the same way you'd pay rent. But this is also the crux of the issue with this program. Once you sign off on a value of a property, that value is fixed. And when you take Russia's inflation into account, it's easy to see why developers are afraid that they'll lose money. If both parties sign a document stating that a property is, for example, worth 4 million rubles, the buyer has to pay 4 million rubles in monthly installments, even if the value of the ruble drops significantly over the course of the payment period. Because of this, the number of these programs has dropped, along with the rest of Russia's housing market. But it isn't completely gone. Pretty much all developer installment programs were cut in half this year. But they're still willing to sell directly to buyers, which is one of the reasons why they're still building so many properties. Another reason construction is still ongoing in Russia is because developers, at the end of the day, believe this will all blow over. They think that banks will lower their rates in the winter. Buyers will come to and continue their purchases, and some of them even believe that the government will reintroduce preferential loans. However, the primary reason Russia's construction sector is still active in spite of low demand has nothing to do with developer installments or wishful thinking for a better tomorrow, and it has everything to do with the industry itself. Russia literally cannot afford for the construction sector to slow down. 7 million Russians work in that sector. It's second only to trade, and it's a key driver for other sectors. For example, the construction sector eats up half of Russia's metallurgy, and it employs almost half of the transport sector. Construction companies focused on infrastructure and road construction are, for example, in big trouble, and that effect rippled on to other industries. Since they relied on government contracts and the government stopped adjusting payments for inflation, road construction companies are now leaders in wage delays, with most of them being in a pre-bankruptcy state. This affects millions of workers in adjacent industries, and that's just unacceptable to Big Vlad. Development construction and residential construction are much bigger sectors than road construction. They are, in fact, the second biggest domino in Russia's economy. And if that domino falls, so too might the heads of certain leaders. Therefore, Russia's leadership cannot afford to stop building. Despite the fact that there's too much supply of housing and not too much demand, and in spite of the fact that they know many of these units will remain empty for years after they're finished, they keep building. In fact, they are now planning on developing projects in occupied territories. And despite the writing being on the wall, Russian sources claim that a market collapse simply won't happen. They're expecting a rough, slow 2026 in terms of sales, but construction projects are expected to pick up the pace in 2027. A lot of uncertainty hangs on the most obvious elephant in the room, the war in Ukraine. Putin is desperate to end this war because it's already affected his economy to such a degree that generations of Russians, not even born yet, will have to pay for their parents' and grandparents' sins. However, he's not exactly shown willingness to give up the occupied territories and stop the invasion. So it's impossible to accurately predict for how long the market will keep spiraling downwards before it finally crashes. When you take everything that was said into account, the data before us suggests that Russia is in the eye of the housing crisis storm. There's too much building that relies on buyers who, in turn, rely on state-backed funding, and now that that financing has been cut off, there's very little demand for housing, as nobody expects the rich elites to afford all this real estate. Sprinkle the growing inflation caused by a drop across all industries and international sanctions, and add to that a budget strained by military demands because of a pointless war. And it's not difficult to see how Russia's housing market is falling to pieces. Experts warn that this is larger than just the housing market, though. It's an early warning sign of an entire country's balance. If the construction bubble bursts, Russia could be hit with a wave of bankruptcy so vast it will make their current crisis seem like just another day at the office. According to Putin, however, everything is going according to plan. The president is still boasting with inflated macroeconomic indicators such as Russia's GDP, 30% of which is currently being spent on a special military operation that was only supposed to last a few days. The issue that Putin seemingly doesn't understand, or at least pretends not to understand, and an issue that the average Russian might find out soon enough is you can't eat GDP for dinner, and GDP won't put a roof over your head. Thanks for watching.